You woke up today already poorer. Not because you spent money, not because you made a mistake, but because the system charged you a tax before breakfast. No receipt, no notification, no vote. You paid it automatically. You pay it whether you're rich or poor, whether you save or spend, whether you understand money or avoid it. You pay it simply by existing inside the economy. This is the invisible tax you pay without ever seeing it. And right now it's accelerating. When most people hear tax, they think of income tax, sales tax, property tax. Numbers printed clearly, percentages you can argue about. But this tax doesn't announce itself. It doesn't trigger protests. It doesn't need laws. It doesn't show up on any bill. It just quietly takes. And the reason it matters now is simple. Governments are buried in debt. Central banks are cornered. And raising visible taxes would cause chaos. So instead, they use the one tax people don't recognize. Let's strip this down without the economics lecture. Imagine you saved $1,000. You didn't waste it. You didn't gamble it. You just held on to it. Now imagine that a year later, everything costs 10% more. Your money didn't change, but your life did. That gap is the tax, how the invisible tax actually works. Here's where people get confused. Inflation isn't prices going up. That's the symptom. Inflation is your money buying less. Prices are just how the damage becomes visible. And unlike income tax, inflation doesn't ask permission. It hits savers first. It hits cash holders hardest. It hits fixed incomes with precision. If you're paid after prices rise, you lose. If you save for the future, you lose quietly. If you hold cash, you lose slowly. This isn't accidental. When governments spend more than they collect, they borrow. When borrowing becomes uncomfortable, central banks step in. They create money, not with trucks, not with presses, with keystrokes. New money enters the system. Old money competes with it. Value spreads thinner. Nothing explodes right away. That's the brilliance. Inflation feels mild at first, helpful even. Markets rise. Debt feels lighter. Politicians smile. Because inflation performs a useful trick. It shrinks debt without defaulting. If a government owes $1 trillion, inflation lets them repay it with weaker money. Same number, less value. The difference is paid by you, quietly, over time. Who wins, who loses, and what comes next? Here's the part no one likes to admit. Inflation doesn't hit everyone equally. Asset owners often win. Property holders, stockholders, people close to newly created money. Why? Because assets rise with inflation. Debt becomes easier to repay. But wages lag, always. Prices move instantly. Paychecks move slowly. That delay is where value is transferred away from workers and savers. No invoice, no explanation, just less purchasing power. This is why the economy can look strong while people feel poor. Because the system is growing, but unevenly. And here's the irony. Inflation is described as temporary, then transitory, then sticky. The words change. The mechanism doesn't. Inflation is the least painful solution to too much debt. Raising taxes causes anger. Cutting spending causes unrest. Default causes collapse. Inflation causes confusion, and confused populations don't revolt. They argue with each other. Historically, this isn't new. Rome diluted its coins. Kings clipped currency. Modern systems print digitally. Different tools, same result. What's different now is scale. Trillions created, globally synchronized, instantly transmitted. If inflation runs at 7%, your money loses half its value in about 10 years. No crash, no warning, just erosion. So the question isn't whether you're paying this tax. You already are. The real question is, what happens when people finally recognize it? And what replaces it when the invisible tax stops working?